Good morning, everybody. So I'm not using my headset today because it sometimes will cut out. So I'm going to attempt to use my, I guess, microphone on my laptop. Hopefully it's good enough. You'll probably hear some clicking sounds and maybe some background sound as well. So hopefully it's okay for today at least. So this is going to be the start of a new series that I'm doing here on YouTube. My previous series was talking about my trading progress and my specific trades that I was taking, and pretty much the settings and what I use to get those results. And I took a bit of a break, and I'm back now, and I've done a couple videos since. But I want the stream to the videos to be a little bit different. It's going to be more about tracking my progress and the mental game, the psychological game with trading, and what is the right mindset, how to what advice and things to look for in trading to get you to the place where you need to be. Either modify or help your trading to get more consistent results, or if you're new, looking for the correct place to start and get you thinking differently or the way that you should in order to profit in this field long term. So first, in these videos, they'll be anywhere from 30 minutes to an hour, depending on how much I have to talk about. And hopefully it will be information that you guys enjoy, and don't find too boring. But how the structure will go is typically I'll talk about my profitable trades that I've that I've had. Whether that's specific trades or whether that's just overall profit, and I can show you my dollar amount, my progress towards doing this full time as a full time trader. Right now I am full time since typically I'm on the road about half the year touring with music, but it's been a lighter year with that, and so since I'm home, this is what I'm doing. Now I'm not making enough to really make this a full-time income yet. I'm trading currently about $35,000, and I need about 50K or more in order to make this work full-time. So I'm getting there, but have a ways to go. Alright, so what you're looking at right now is my Oanda live account. You can see that it's live in the real money. I know that a lot of traders want to see that to verify that this person that's trading is not on a demo account. And you can see the balance here. Now I started out with exactly 10,000 on this account, and right now I'm at $118 profit. This account was started on the my first trade went out on the 26th of last month, so it's only about 4 days old. So it's really new, and I'm already looking at a decent profit. So let's go over those numbers right now and give you a progress update. Okay, so this is my small little MaverickFX account with $266. I'm going to pull up the stats that I have going on all my accounts. Alright, so this is the MaverickFX account. And you can see that just with that one profitable trade, it was only $5, but it was 1.94% with just that 266 in there. Now, as stated before, this is about 4 times more risk than typical. Because typically I like to use 0.01 lots on a minimum of $1,000, and this is a $266 account, so I'm like over risking this account by almost 4 times. And that's not recommended, but since it's this is money that I don't really care too much about. I'll just leave it in there to continue running the stats on the account. We'll see how far it goes. I'm not, since it's 4 times more risk, I'm not planning on this account lasting too long, but we'll see. Maybe I'll add more funds down the road. But still, we are at a 50% gain overall. And since I've withdrawn my funds, it's still looking at about almost $7,000 total withdrawn from LMFX successfully. And that's just a profit. All right, so next, and then the next account, this is my friend's account. Let me make sure that it's updated. Okay. Yeah, so this is my buddy's account that he's trading with 18,000 using my my strategy. As you can see, he's already profited it on this account, and it started back on the 14th of this of last month. So he's only been running for about 2 weeks, and it already has 3% profit. This is the main account that I'm managing for my friend at 124,276. Now the profit for today, I've already had a winning trade, which I'll show you here in a second. In this week at 579. So I'm actually my buddy is giving me a commission for this. We agreed on a lower commission because it's a friend. If it's more commercial trading, which I'm not really allowed to do, I can't go out and advertise that I'm managing accounts unless I'm actually certified by the NFA as a commodity as a CTA. But since it's a personal friend, I am allowed to trade on arrangement with this person, and he has we have decided for a 10% commission cut on the profits that are made on the account, and there's no contracts. It's just on a friend basis. I mean, if he doesn't pay me, then I'll just stop trading the account. But you can see here that this is the profit for each month, and July was our largest profit because he had the most money in the account at that time, so $6,451. So I get a 10% cut of that. So I sent out an invoice today for $645, and that's my cut for the account on the month. Not bad, considering that this is only $124,000, and that's 10%. And so, $645 is, a decent amount to help out with the monthly bills. Okay, so things are going really well, and if you want to see the change, that was 5.79% for last month on this size of account. And things are going really well. Smooth equity curve, a couple of notches that or dips in the balance that I've already mentioned in my previous videos. Alright, so this is the new strategy that I was testing in my last video. I told you guys I was testing a new strategy that was built upon martingale, and you can see that it has a 3% loss. Well, I ran into some issues here, unfortunately. The martingale, as you may expect, ran my account out of margin. And I did end up closing the trades once I couldn't enter any more trades, and I just accepted the loss. I was considering having the EA make the losses back, but it would take probably a good 3 weeks to do that. And so instead of waiting for that to take place, I decided to just restart the account with 3 times less risk. So I was using 0.03 lots for this account, so 0.03. And I have stopped using that and now using 0.01 for a $10,000 account, which I'll show you what that looks like now. It's currently on demo and working, and I just started it yesterday. So it's at $16 profit, so not huge. I'm expecting this account to make me anywhere from 0.7 to maybe 1% each week. So it's not going to be, well, it's probably it could be anywhere from 0.5 to 1% each week. But we'll see how it plays out. I like the idea of having trades constantly in and scalping the market, and that's what this system does. Sorry for the freaking MaverickFX book sounds in the background. They always do that with the chimes. I think I can disable them, but I have so many of them up. So what I wanted to talk to you about today, since I did the profit report. Oh yeah, I didn't show everything. That is right. So you guys know that I'm trading at Maverick, right? So I'm trading 24,000 at Maverick, and I get to keep 70% of the profits there. So that makes my total funds that I'm actually trading for myself and getting to keep, well, most of the profits. It ends up being about $34,000. So I have 10,000 at Oanda and 24 at Maverick, which 6 of that is actually only mine, and they're giving me 18 of their funds to trade, but I get to keep most of the profits. So it's pretty close that like I'm managing $34,000 and getting to keep a good portion or most of the profits from all of from those accounts. Okay, so I'm trading on a demo account here. You can see it says at the top, if I pull this down, that it's a demo account. Yeah, right. I'm not hiding that. And it's a 24,162 account. And the reason why I'm doing that is so I can mirror the results on my Interactive Brokers account. And so as I said before, I have a bridge that's merging the demo MT4 to the Interactive Brokers, since they don't have a MetaTrader MT4 platform. So I have to make means in a different way to make Maverick FX work. And so you can see that my total account value is 24,148. So it's not mirroring exactly, because I actually entered one trade a little bit late. And I'm going to probably lose some or potentially gain a little extra on some trades because of there's a small delay in closing some trades out because of the MT4 bridge that I'm using. All right, so then that's fine. If it's not mirrored exactly, that's okay. I'm not too annoyed about that or worried about that. But things are going well at Maverick. I have my first profit. Now keep in mind that that Maverick does require a monthly subscription fee to using their service, which is $200. It might be a little pricey for some people, and so it's important for me to at least make $200 profit on the account before the month is over. And I'm only into the first day, and I'm already at 148. So this account, so I'm just about break even at this point. I suspect that I'll make a good, let's see, around $1,200 on this account, maybe, if I'm lucky, anywhere from $1,000 to $1,200 over the month. And so that's a good amount to take away, and I'll pay $200 in the fees to Maverick, and then also a 30% cut. So starting out, I'm only going to take probably a good $500, maybe $700 from Maverick at the end of the month. It may seem like a pretty small cut considering the account size, but the thing is that it's not about the cut size right now. I'm looking for later down the road when they move me up levels based on how many profitable months I have in a row, or how many profitable months I have interest in general. It's all about keeping your account above the high water mark. All right, let me make sure that this is running correctly. Okay, so right now I'm looking at a pretty good profit overall for myself. When we take these two counts into consideration, so my 118 and my Maverick at 148, so I'm looking pretty good. All right, so that's kind of a long profit update, but things are going smoothly. And if you really want to track my performance, I would recommend watching Robert's account. You just search my name, Little Red Rye, and you can see this. This is probably the most accurate representation of my day-to-day profit on a larger standard account. Okay, so now I'm going to get into some of the questions that were asked to me. I've had a lot of inquiries from people and personal messages here on Forex Factory on YouTube asking if I can reinstate my stream. I haven't decided to do so. I've been tempted to, but I'm just not sure if the stream is the way I want to go from here on out. It's because I feel like a stream is more about showing your trades, your in and out trades, and I'm not really sure if it's something where I want to show everything about my trades and how I'm doing things. That's not really where I want to go anymore with it, and that's how I was doing things before. It was a good portion of my videos were streaming, and I would show you exactly what I was doing. And since I'm wanting to be a little bit more conservative with my approach in that, I think that I'm going to stick with the videos for now and go that way. If you guys have any suggestions on what you want me to cover, I can take the suggestions and try to work with them. So I'm on my thread here at Forex Factory. It's been pretty active. There's been a lot of people asking questions and posting pictures of potential trades or trades that they took. And a lot of them follow my criteria very well, and so people are watching my videos and getting a lot from them and using the strategies that I incorporated in those videos for themselves, and even modifying them to complement other strategies. So what I wanted to cover right now is Steve Pat's comment in regards to trading on the Japanese yen. So he says, I don't know how much research you have done with the pound Japanese yen, but I like to have said I find its movement good for this method of trading. I must admit I do wonder how much of an advantage discretionary trading is as opposed to just entering trades like you or EA does. Without doing a lot of research, it's hard to prove this one way or another. Having the initial trade go against you and trigger a second or even third trade can actually be an advantage when it comes to the distance price to move to your take profit. It certainly does pay, though, to be trading back into previous price action as opposed to trading into no man's land. Thanks for opening my eyes to the advantages of trading this way. So, Steve, yeah, I haven't tested the pound Japanese yen with this strategy very much, but recently I did just run a test to give you an idea of what it looks like using the settings that you are. So I looked at your screenshots that you're using the RMI with the standard 70 and 30, and with those settings, using my candle entries, at least with the EA. Now it's not perfect on entering where there's good support and resistance and hold numbers in the market. Now it's not looking at hold numbers, it's not looking at support resistance, it's just looking at the RMI to see if it's above or below. And in a lot of cases, the RMI does fall in support and resistance areas when it does cross those levels. But it's EAs can only be, they follow a criteria. It's a robot. They can't have a lot of discretion. Its discretion is based on what the RMI is doing as its filter, and it's not looking at whole and half numbers to help guide it in its decisions. But I was going to look at this trade right here, for example. Let's remove the grid. Okay, so you can see that before it there were some good trades, but this is my worry with the pound Japanese yen, is that you could get stuck in some unfortunate positions that cause you to have to take some pretty big losses. So you can see here that it's hard to make a judgment when you know what's already happening in the future. Like if you're testing a system in the back history, you have to try to ignore what you're seeing in the future. So you can see where the first entry was right here, and it was on an inside candle setup. And you're thinking, okay, well, if we're looking at the support resistance areas and we're marking the main ones, and we see that if we're marking every little single one, I mean, there might be changes here, but you're looking at the lower highs, and we see that they're making that they're kind of going downwards, and so that's kind of a trend. And so even though from this point to this point up here, there's not a lot of pips in between. There's only about, if we're counting from the body of the candle to our actual potential entry, it's only 61 pips. So this may not be a good entry, but if somebody was wanting to enter on the potential of a trend on the movement down, they could really get stuck in here, and you can see what happened. This really pushed up. Now, I don't remember what happened in here December, but it was probably some fundamental political news that was happening at the time. I believe it was. I think that that's when Theresa May announced that they were going to do the election early. That might have been it. I can't remember. Maybe that was after that. But there was some kind of news in the pound that caused this to go up. I just can't remember at the moment. And a lot of times that's not based on a technical. It wasn't like all of a sudden this was a good technical trend that just kept going. It was likely because of some fundamental news or political news statement that came out, causing us to get into a really unfortunate situation. Now, like I said, Steve, it's possible that you may not have ever entered this trade here. But even if you entered later, you'd still be in some pretty awful drawdown. And that's just the kind of the fundamentals of how this pair works, is that yes, it does have it does move and it's volatile, but like other Japanese yen pairs, there's not a lot of pullback in the actual when it's moving up. So try to ignore the red lines, but you'll see that there are some pullbacks, like from here, right here. There's a small pullback here. There's a really small one here. There's one here. Maybe one here. But the problem is that they're not big enough. They're not big enough to help us get out of our trades without taking large potential drawdowns. And we need to take pairs that have more of this kind of ranging activity or big ranges instead of pairs that really have a straight trend with almost no pullback. So instead of like a trend that looks like this, we want something that's more like this. And so the pullbacks are much larger than these small little things. And so that's why I've picked my specific pairs, is to help in when those trades do happen to go against me, and getting out of them before having to accept a loss. And so that's why the pound Japanese yen, although it can give us some good pullbacks like this right here, but that's too late. Look how much movement has already happened. We're talking about, from our entry, it's already been 36 pips before we actually got a good substantial pullback. Now that's what you'll notice with the euro pound, the pound Canadian dollar, and the Australian Canadian dollar, that there are more substantial pullbacks, and the trends are more choppy, allowing us to give us a little bit more leniency with our trades. And it's a little bit sloppy with as you can see here. And like I said before, it doesn't mean that you would be taking this position, but even if you entered later on, let's say that there was another inside candle. I'm going to see if I can find one. Well, there was one here, and I don't see one that pops out. There's a questionable one here. So there's also one here. So you could get stuck in this pretty bad, but depending on the political climate or fundamental climate, there's a possibility that you may not even be taking trades in here because of the pressures that were buying pressures that were hitting the pound at the time. Yeah, that's I guess my take on the pound Japanese yen. Just be very careful with the pairs that you use, because I know it's really hard to actually know what pairs to use my strategy with. And I picked my pairs specifically because backtests have shown that with my strategy, those pairs are the most consistent. It doesn't mean that there are other pairs that exist or that you'll have long consecutive wins like you are. It seems like you're doing pretty well. But this is also, again, an EA, and an EA is not taking, price action and whole numbers and all that kind of stuff into consideration. So it may be you may be able to get out of a position when the EA isn't able to get out. And that's something that I may talk a little bit about today before I get into answering more questions. Is why do I use a grid system with this type of trading? Wouldn't it be better to trade this strategy manually and enter trades like that instead of on a grid? Because a grid is a lot. There's not as much strategy or thinking behind it, because it's just basically following a set pip before entering more positions. There's not much of a strategy behind that. That's just my money management side of trading to help get my trades out of potential losses. But the biggest reason why I do take that grid is, I'm going to use this as an example. You can see that we have 4 trades here, right? Now, the first entry was after the inside candle set up here with an entry here, and I entered on a 20 pip grid, which gave me four trades. Now, let's see how I would enter. So I would enter this first trade, and I marked it at the level I would enter, right? And if I wasn't taking a 20 pip grid, where would I enter my next position? Well, I would probably look for the whole number. I wouldn't wait for a confirmation from an inside candle or anything like that, but I'd look at the whole number to see what's up there. Now, I'd probably go down to the 5-minute chart and try to find where that actual position is. Okay, here it is. So going down to the 5-minute chart to see if there's any hints that I can get in price action. So I don't see anything right at the whole number, but I do see this inside candle right here. Now I would actually consider entering on this right here. So not right at the whole number, but I would wait a little bit and enter right on that position, and that would be my second entry. Now, would I be able to beat my EA? Maybe not, but I'm looking for 50 pips profit here. So we'd have 37 minus 18. So I'd actually need it to almost come down to the original first order. So this is order 1, order 2, and I would actually need more of a pullback in the market in order to come out with the same amount of profit that these 4 trades did. And that's why I use a grid, is because it typically will get me out of trades faster than even if I just use this in a smart way for entering trades, re-entering trades if they go against me. And so the grid is a really easy way to control your risk, but you have to make sure that each of these trades are not high risk. They have to be a very low calculated risk to keep your risk percent on your account very controlled. And you don't want to be having drawdowns of 20-30% because you didn't anticipate 4 trades going in. I have my account ready to take 20 to 25 trades just in case that it gets to that point. In most cases, before I have 20 or 25 trades in, I'll start closing out trades, accepting the loss. Excuse me. So that's why a grid system is really important to me in the system. And it usually can beat me out on having the most minimal of pullback and coming out with a profit. So I will likely continue to do so, and that's why the EA is probably better than live trading, but it just depends on your original entry and where you think that could be. Because some people like to be really picky, or they can be picky with their entry point. Now they might, you could say that, for example, Steve, if you're watching, that this entry here, okay, so it was a good inside candle setup after a push of a trend upward, and there was an inside candle right here. Now just don't watch what happened after. It really ruins your judgment. You have to act like there is that this was the last part that you see on the chart. Let me scroll. So you're not your judgment's not skewed. I didn't even go far enough. Here we go. Wait. So this is our inside candle setup, and that was our entry. It could have very much well gone down from there, right? And it didn't, and so that's why we entered on a grid. But would you take this position? Is there what's good about this trade? Well, one, it's not really near a whole number. It's near a half, which I don't typically like to use. I don't feel like the half number is strong enough to really enter trades on, or to give me further confirmation. But I am looking at this level. This level did go down here. We got a minor support. Again, that same resistance up here at the top. And then again, we were getting some resistance from this candle and from this one that was inside as well. And then with our entry right there, further again, indication that there was potential for a push down from there. And as you can see, it just didn't happen. And sometimes that's the case. And so that's why my grid took over and I was able to exit in profit on that pullback once it did happen. And it just pretty much came back to that same area, which was good because I had that grid going. All right, so I don't know if that helps answer any questions. I know that you want to look for good potential entry points, and like for example here, this was a inside candle, right? And you can see where my trade was entered. And was there like a whole number or a half up there? Not really. No like further indication there. But let's mark the level because we can see if there was something in the past that was in that area. Looks like there was some minor support in there, and it ended up turning into a resistance here and here, a minor resistance, but not much in the most recent price action. Where'd I go? All right, there. So it's those kind of things that you have to try to take into effect. And it's hard to say that if trading my strategy manually is better than using an EA. The EA can manage your trades on a grid. Now, if you're using manually trading my strategy with a grid, that might be different. And that's what I'm actually training a student to do right now. He is learning how to trade my system using all the things I've been talking about, whole numbers, support resistance, to help guide the entry that we're using, so the inside candle entry, and then also using a piece of software that allows him to his trades to be managed by a grid system. So this kind of integration with manual trading can potentially be beneficial. So what about the trades that just happened? So I had two trades that went in, as you can see from the profit that I showed you. There was an inside candle set up there. I took a nice trade, and you can see that I also took one just before that on the odd CAD down here, and these were both expert advisor trades, and this is the kind of action that you want to see. You want to see the price obeying when you enter, and basically almost going into no drawdown, just like this trade here. No drawdown, straight down. I basically found the peak of that move before it headed back down. I mean, my entry was only 13 pips from the very top of that move, and it's how you can trade the market without using pretty much any indicators. And my strategy, or this type of trading, allows me to get into a trade at the earliest possible time. Now, I can't always get the entries right, because sometimes we need to enter multiple trades to get that pullback. But that's why we use these specific pairs, is because they typically do have these nice ranges, large ranges. And I was able to capture this move. Now, I only took 50 pips, or just, yeah, about 50 pips of the move. And so I find so many traders like asking me, why not hold on to this longer? Why not wait for another inside candle setup on the opposite side? Because the market doesn't always use inside candles as reversal or pullback points. The market can reverse without an inside candle setup. Like, for example, here, it went down from there, right? There was no inside candle setup at that point. There was no inside candle setup at this point either. And so we can't always expect that the candles are going to tell us everything. They just give us hints into what may happen. And you could say, oh, well, why not you hold on to this until it reaches a whole or half number? Because that's still not a good enough indication to hold on to position. Why not do a trailing stop? I saw, Steve, I saw you doing this. And you can use trailing stops, but be very careful with them, because they can really hurt your profit. Because I did see you taking a trailing stop, or at least trying to extend your profit from your entry. You took the same trade as me, and you were looking for this to go further down. And I saw that you were going to take maybe a good 10 to 20 pips. And the problem is that you ended up losing more pips than I did, because I took a standard 50 pips profit on this trade. I know it looks like I closed it out earlier, but standard 50 pips profit you would have gotten on this trade, and it would have been more than what you actually got because of trying to ride this move out longer. It could have very well worked out in your favor, but you'll notice that overall, and I've done testing with this, that taking a set amount of pips, so let's take for example 50, is more profitable and less risky than if you did a 50 pips trailing stop. So if you did a 50 pips trailing stop and you let that ride, I've tested it. It's more risky, and you don't get as much profit in the end, because a lot of trades, because you'll lose pips, and that's what happens. Is a lot of times a market will push down, go 50 pips to the 50 pip mark, and then shoot right back up, and you'll close out the trade at break even, because you were I don't want to say too greedy. You were greedy. You're still listening to what other traders are telling you, and that's the letting profits run and cutting losses short. I don't want you to throw that mentality out, because there is some good to it, but I do find it more damaging than good, because it keeps making us try to work with an idea that is faulty. So just be careful with how you use trailing stops, because I don't want you to lose profit out of it by trying to extend those gains. That goes not just for the people on my thread, but people that are using the strategy in general. So let's talk about, the trade that I was talking about was the one that Steve posted here. You can see that it was the same entry as mine on the pound Canadian dollar. And he had a set profit of more than 50 pips. I believe if he was looking at it at the 164.5 level, so he was using the half number to exit his trade, and it didn't quite get there. At least I don't think it did. Maybe it did actually get there. If he did, it was barely. He barely was going for about 60 pips. But I don't think he would have gotten it because of the spread. Maybe if his spread was low, he might have been able to pull out of that. But it's likely that it didn't happen. 64. Yeah, it looks like it was pretty close. And looks like he's so it's the same. This is the odd Canadian dollar as well. So this is the similar trade I took as well. All right, so good job, guys, with your trades. A lot of them are the ones I would take. But the idea that manually trading the strategy is better than EA is questionable. Discretion is a powerful tool, and it can protect us in certain trades. But you also know that discretion isn't always going to protect us, though. There are trades that are just going to go against us. And you know, this trade right here, on the odd Canadian dollar could have just as easily gone against me. It could have shot up from there easily. I just happened to find the potential point where it could reverse. And this is a really good example of a market pushing up, inside candle setup, showing the potential slowing or end of a move. And the reason why is because this inside candle that I'm looking at right here did not make a new high. It didn't break the previous candle's high. And when candles continue to keep making new highs and closing that way, then that indicates to me that the trend or the push in that direction is still strong. And so you need to find a way in real time to find when that trend is potentially slowing. Now, Steve has pointed out, one person that has pointed out, that that you can, when you get to whole and half numbers, let's see if I can show that. So I marked the whole number 1.00000 to show that, okay, there's no inside candles here, setups here. There's no inside candles set up in this area either. But Steve's not quite using an inside candle setup to enter his trades. He's looking at a little bit of a broader, more broad of a picture, which I like to see, because he's not just using a one candle setup, but he's using he's looking at the candles, looking at the level to see how the price is behaving up at that whole number. Now, the whole numbers are typically places that traders will enter and exit trades for their books, and so they typically come into support resistance areas or more volatile areas where you'll see a lot of this kind of action near and around the whole numbers. And a lot of times we can get hints from price and from the technical side if the trend will continue to push above that whole number or continue to push down, or will reverse at that point. Since there's no inside candles here, we did get some hints that there is resistance. Okay, so It's harder to tell here because that was the first time I hit that level with how much space there's to the left from here. And so it's hard to tell that this would be any kind of entry here. But it went back down, went back up. It hit that same level again, went back down, bounced back up. And so there's obviously some kind of resistance at this level. And we're getting hints because of how price is behaving there. So if it continues to keep doing that and it gives us some kind of reversal indication like this right here, this is a bearish engulfing, very nice bearish engulfing candle that made a new high of the previous candle, and is actually the highest of all of these candles in this area. And it also had a very nice body compared to the rest of the candles, and it closed below the opening of the previous candle as well. That's just a really nice setup showing that this area has good potential. I'm not saying it's guaranteed, but a good potential for it to shoot down. And this is the kind of technique that traders can use if they fully understand price action, how price reacts to certain levels in the market. And now it doesn't have to be near a whole or half number. Let's see if I can find another example. So I mean, this is near a half number. It's near the 97.5 level. But you can see there was no indication, at least a bullish engulfing or inside candle, that this was going to shoot up. It just kind of shot up there. There was a hammer here, but that's not enough of a indication to actually take a position, at least in my book. I would need for this level to bounce around a little bit, and I might take another position later on. But since it just hit that level once and then shot up from there, I can't really do much with that. But you'll find areas in the market that don't fall near a whole or half number and do that same kind of thing that I was telling you about, where price will bounce around that level and eventually give us potential indications that there is going to be a pullback or a continuation of the trend. Now, as I was saying here that this was an indication for a pullback going down, we could have easily seen something that showed us that there could be a continued push in the up direction. So, for example, you can see that how price is closing above this red line that I put, which is the whole number. And you can see that the body of the candles are really struggling to have a powerful close up above. And the most powerful one above that whole number was this candle here. But what did we also get right after it? A big reversal candle. So an indication that this is just not going to hold when such a big reversal candle happened right after the potential for this to shoot up at that point. And so instead of entering on a buy trade, so let's say that you're wanting to trend trade this, and you were thinking when you saw this candle close in a good strength above the whole number, some may enter right there and get faked out. I'd actually wait for a more clear indication that this is closed by closing a good 20 to 30 pips above the this one only went about 8.17, a good 20 to 30 pips above the whatever the whole number is. And probably I would say at least 30 pips above the whole, below or above the whole number, because I find price will behave in that way that I was telling you about. A good 30 pips below and a 30 pips above, and you can see that's kind of how it worked here. 30 pips, it went 40 pips down, and it went back up 40 pips, and it bounced around like that a lot within a 60 pip bracket. So 30 pips above and 30 pips below, you'll see that kind of action on a whole number. Typically, that is if the whole number is substantial enough to show any kind of insecurity in the market. All right. So, sorry, I got a piece of hair in my mouth. Thank you, my cat. There was a couple other things that were talked about. I wrote up today, and one of them is on a thread that was started that was apparently really popular in Forex Factory. 32,000 to 100,000 experiment. Trade out your own risk. So this is the kind of stuff that drives me nuts, because traders continually just they continue to just keep pushing their luck with their trades. You'll see this in the trading journals all the time. I'll come back to this thread in a second. And you'll see these kind of things come all the time. Possible to turn 1,000 into 1 million in 12 months. So you'll see that this guy's doing pretty well. He's got 42%. But these always end the same way, guys. They always end the same way, and it's really unfortunate. And looks like this guy's using a mini account because it's saying $6 million. So I'm not really sure what's going on here. But I'm pretty sure it's a mini account. So these kind of journals that come up all the time, just come and go, and don't trade like this, because it's not what you should be doing. Honestly, it's not something that's safe. Like, for example, so this guy started a new account. So typically you'll find threads that are doing well for a while. Some of them can even make 200 to 500%. And then all hell breaks loose. This guy, I'm pretty sure that this is the same dude, that he just opened up a new account, I think. But he blew his last one. Actually, maybe it wasn't him, since there's so many of these. Who knows if he deleted it or not. Let's see if I can find it. But the point is since I can't find it, unfortunately, that don't over-risk your account. And you should be more like traders like this guy, where his name is Profit Farmer, and he looks for smaller gains for the month. He's doing very well at 22%, and he's looking for something like me, where it's 5 to maybe 10% profit per month. So very conservative. You gotta realize that you'll stay in the market if you're conservative for a longer period of time. Traders that try to grow their accounts by 100% or more per month are just not going to last in the market, and they're going to end up throwing away their money, and it always ends the same way, no matter what you do. I haven't seen a trader consistently make more, for real, more than 20% each month, and that's still really high. There's a few traders that have done it for 6 months, I've seen, but the result is always the same. They always end up blowing their account. So let's see if I can go back here. Okay, so this guy, Alex Reed, was saying that he doesn't. No stop loss is the strategy. They were talking about using stop losses in a trading strategy. No stop loss strategy of counter trend traders is basically, he's saying that using no stop losses is a counter trend trade strategy, because 90% of the time they are wrong. So they let the loss run until it turns around, if they can bear the push against them. As you know, I'm a counter trend trader, so he's basically speaking to people like me. But I do use a stop loss. It's wide, and I use it pretty much as a backup. But it does help me to gauge when to start to cut my losses and to start looking for other opportunities. So basically, I told him that not every counter trend trader uses a stop loss, or not every counter trend trader doesn't use stop losses. Okay, there was another thread that I responded to, and the reason why I'm telling you guys this is because since I'm trying to go in a different direction with my videos, I'm talking more about the psychological part of trading and what the correct way of thinking is, instead of following everybody else because they're losing. You got to be doing something differently if you want to make it in this trading world. So this is a thread that's talking about good traders trade, bad traders teach. I have taught in the past. I've also taught music as well. And I've taught lessons or music when I was making $100,000 a year. I was charging maybe $70 an hour. It wasn't anything that was great money-wise, but I enjoyed doing it. So I still was getting paid for it because that was what the standard was. And so I responded to this thread because people were saying a good trader wouldn't charge for trading, and a bad trader would charge for the trading because he needs the money. And I don't necessarily disagree or agree with that, but I did say I've been a profitable trader for 3 years, but I still don't make enough for a full-time income. In 2015, I managed a $460K account for a personal friend and profited him 44% on the account before we parted ways. Currently, I trade over 176. Let me know what I'm reading here. Currently, I trade 176K, which is actually true. I trade 176,000 or manage it, which 35K of it is personal funds. I rarely advertise training, but I do teach selected individuals that reach out to me sometimes. I do charge, but only for the time. So I charge for the lesson time, not for the system or anything else. I'm also a musician. I'm also a musician and have been for 29 years. When I teach music, I also just charge for the time. I see people paying thousands of dollars for courses, but I just don't think that that's a good way to learn. The best way to learn is hands-on with another person, so they can check your work and make sure you're on the right track. So that's the big thing, is that if you buy a course and it's like $3,000, it's really hard to know if you have the right mindset for how to utilize that trading course that you just bought. And I see that all the time, that people misuse the information that they're given and skew it or manipulate it in some way, so it's not really valuable anymore. And that's the big problem with courses. Even if it's a bad course, that's something different. If it's garbage information and the course is just being used to profit off the course itself instead of the information behind it, that's something else. And that's actually something that is pretty typical, is that you'll see bad traders making trading courses just to make money off the actual sale instead of off of the trading the system itself. Now there are a few traders, and there are traders like me. I'm not saying that I'm the most amazing trader in the world, but I do and have traded large amounts of capital, and I've had a good 3-year track record of profitable trades, or profitable trading. But I still don't have enough money to make this work full time, like I was mentioning in the past, earlier in this video. And so yeah, if I take on students, I'll charge for it. But even if I was making $200,000 a year trading, I would still charge for the lessons. Maybe I'd charge a little bit more, maybe the same cost, but I would still charge for the lessons, even if I was trading and making $200K or more a year. All right. So this is no way to pitch this message. I was just kind of having a disclaimer here. This is no way a pitch for trying to get more students. I'm just trying to give input on the matter. It should be up to the trader if he or she decides to charge for training. I do feel that many traders that train should not be training. How about say that 3 times in a row? And so basically, it's the rest of it is what I was just saying. And just make sure that if you're looking for somebody that to mentor you or to get training or to buy courses from or something, make sure that they have a profitable, like verified trading history. talk to them on the phone. I mean, or email them or chat them. You want as much communication as possible with the person that you're working with, because if they are not legitimate, they're going to try to hide and to protect themselves, just in case something legal comes against them. So the more honest the trader is, the more likely your experience is going to be better. So just because that mentor has good trading stats does not mean that they will be a good teacher, but you can at least they have good trading stats, and you will have a chance of learning a decent strategy. It depends on how good of a teacher that person actually is. And I proceed later on to, he asks, oh, you traded a 460K account, what happened to the 44% profit? I go into what happened with that. You can check out the thread yourselves. I'm not going to get into the rest of it. All right, so let me see if I've had any other trades that have gone in, and not at the moment. It looks like there's some action going on. Looks like I could get some trades before long. So this is actually a pretty good setup, and I would actually consider taking a position here if I was manually trading. But I'm trying to lay off manual trading for now and just let my EA do the trading, because I trust it to manage my trades now instead of having to do live trading on top of it, or instead of the EA. So this is a good engulfing candle showing us a failing push down, or the push down is stopping. Now, this kind of candle means, an inside candle up here means that the push up is slowing, right? And that there could be a peak making a place. This is a more abrupt change in direction because we have the wick. That means it shot down a little bit more, and that was a fake out, and then this had pushed some volume in the opposite direction. So this is looking like it's going to shoot up from that point. And we look at the bottom to see what's down there, and it looks like there is a half number. I'm not sure how much that is taking into consideration the half, but it is maybe looking at the previous support level, and it may be bouncing off that. So depending on how much this candle actually moves in the next 8 minutes, I would consider taking it on a long position. But if this candle is too long, if the body is too wide and it continues up in the next 8 minutes and pushes up another 20 or 30 pips, I actually wouldn't take that position. And the reason why is because already too much movement has happened in this one candle. The reversal has already had too much volatility in the long position to really catch much of the movement. I wanted this to close where it is, because it has a lot more potential to shoot back up to this place up here. But if this extends further in the one candle before the candle closes, then there's not a lot of room to this next resistance level. So this is kind of standard price action knowledge and how I view the markets, and it helps me to understand more about what's going on. Now, typically what I would do is, when I see this happening, I'll be looking at what causes it. Is it the news? Is it the price action? Is it the technical? What's causing this trade right now? And so I'll look at the news just to see if there's anything that is pushing the Australian dollar up right now. I already know that the news from last night pushed it down, so what's pushing it up? And it's that kind of stuff that you need to figure out why the markets move the way that they do. And a good knowledge of technical, fundamental, and political, a combination of those things can really help guide you in figuring out why the markets move the way that they do. All right, I think that's going to be it for today. I've been going for about an hour just talking. This is much longer. I hope it wasn't boring. And let me know if there's anything that you would want me to do. Profit's going well overall. And I'm constantly looking for ways to improve my strategy by decreasing the risk and increasing the profit. But I will always look to decrease the risk first before trying to increase the profit. I feel like too many traders go the opposite way. They try to increase profit before they realize how much they're risking. You should do the other way around. Protect your account first and then look to see how much profit you can squeeze out of it. And if my strategy proves to be better by lowering the risk and also lowering the gains, I'll do that. If it means that my strategy is safer, I will likely lower the risk and be fine with less profit. And that's the way that you guys should be thinking. So I'm not sure if I'll be doing another stream later this week. I might do one at the end of the week, just to follow up on what other profit, how much profit I've had for the rest of the week, since it is only Monday, and how things are going, and if there's more material I feel like to talk about, things that have happened on Forex Factory or on YouTube, or some things that I find that could be helpful to new traders and experienced traders alike. All right, thanks guys for watching, and I'll let you know when another video is coming out. Good luck. Bye.